Hello friends, let's take a look at Chainlink together. Thank you so much for tuning in. This is the Rocky Outcrop channel. We look at Bitcoin, Ethereum, Chainlink and Tezos on a daily basis and occasionally do bonus coins as well. Thank you so much for tuning in. A friend of yours is a friend of mine. Share this video with a friend of yours because I'm sure they'd appreciate it if you do, and I would appreciate the friendship as well. So that's great. Let's move on with the channel. Oh, by the way, thank you so much to everybody. Really, genuinely appreciate it. Everyone that hits like and subscribe. It's a massive boon to my confidence. Thank you so much. Let's look at the price action and say, hey, that's good that we've managed to maintain above the 382 over here. Having touched the 50% and just wicked above it and back down again. Coming down to the 382 and going past that would indeed create a valid Fibonacci retracement, having gone past the 236 here for a reversal potentially. If I could just draw in, excuse me, I didn't mean to click like that. I could just draw in and take a look and see from various areas. For instance, over here and up to where we are now, the 50%, the 236 coming in here, and this one is at 42,000. And if we move this up to just the last sort of swing low and look at this versus the swing high here, that's wick to wick, or is it body to body? Well, there is no wick really, is there? Well, it's not wick to wick, sorry, there is a wick, couldn't see it behind the candle, and draw this in here, then you can quite clearly see the 236 coming along there. It's no surprise, we talk about this quite a lot, there's a lot of dynamics, in terms of the maths of these things, so we're hoping in the sense that this prices are able to stay above 42,000 to continue the upward trend. This could be just consolidating before we move up again, and there is a sort of slight chance that there's a sort of consolidating type pattern here, as but off the, initially just looking here, this with the 236, the gestalt nature of these things makes me want to say descending triangle, but if I draw in the bottom line here, you can see much more like a symmetrical triangle, and of course it's not drawn in perfectly, but I'm trying to do this for brevity. If we break out towards the top side, we could be looking up towards 45,000, and if we break down to the bottom side, then of course we've got these magnolia lines coming in here, and if we go all the way over to the left, we have so many times, that's where the 236 Fibonacci retracement on the all-time highs and lows comes in at, and we want to see the prices stay above that because we don't want to validate that Fibonacci retracement, which would take us further on down. So, either of those things are valid enough. If that happens, well then, in general, if this is your high and this is your low and this is your high, that could still be putting in a higher low, which is the dynamic which always exists between bears and bulls, and why it's more or less fundamentally wrong to ever declare yourself to be a bull or a bear without having put some sort of context onto the price action. You could very happily call yourself a bear, which expects the price to go down to 40,000, and you could very happily call yourself a bull, which expects the price to go down to 40,000, or indeed you could say that you'd be bearish at 45,000, expecting a turnaround there if there were to be some breakout. Hey, let's not get too caught in the mud. That'll do in terms of oh, actually no, before we move off this here, remember descending volume triangle, here essentially showing us that we're consolidating. It ties together fairly neatly. We do expect a breakout of some sort in the next wee while, but I'm not talking about something miraculous, just really a case of whether or not we put in higher highs or lower, a higher low, or indeed an equal low or whatever thereafter. And yeah, I suppose we could look at this here, but we're consolidating, so we can see that we came up to overbought territory here and moved back down a little bit, having a slight reset. You can see that we were sort of class B bearishly divergent on the MACD. You can see that we were sort of we were convergent here on the RSI and the stochastics, but the RSI came up to the sort of bullish control zone, got rejected from that, and we've been supported by the EMA since, and perhaps we'll see it continue to go towards the upside. It's really, it's not worth me declaring which direction this will go, because I don't care about that sort of YouTube clickbait style effort, or even just phony analysis. If you want to be professional about this, look at this as it is and actually acknowledge that there's risk out with either of these areas. Fake out territory, I would say, would be the previous high there up to 44,000. Indeed, fake out on the low side could be down to the previous low at 42,000, and then you could look for the fuller move thereafter. Versus the dollar, it's actually very much the same sort of a story, except it's been stretched out longer in what is generally speaking an upward trend. We have higher lows all the way along here from a broader perspective. If I go to the 24-hour time frame, low, higher low, potentially, along the way here. And in terms of the highs, high, higher high, higher high, higher high. But as you can see, the enthusiasm has been waning as this has been going up. And of course, that creates this ascending, broadening structure here overall for us, or perhaps an ascending wedge of some sort. In the meantime, though, actually, really what matters for us is whether or not we're inside this ascending triangle formation. Currently still looks like we are, and we have this descending, broadening wedge on the go with the RSI, and we have the stochastics managing to keep themselves afloat, not putting in too much of this divergence that we've been looking out for, of course, across the piece versus this high versus the next high. Whereas over here on the RSI, you can see that there was a bit of bearish divergence between the last two highs, and that kind of then, as we're in oscillating price action, we look towards the stochastics for sort of confirmation of that. It's not quite there, but if you look back even further to over at these highs and the current highs for divergence, then you could say that there is some. However, overall, generally speaking, what we have is the question of, will we be able to top above this area? Can we do that in the next rise up? I think we're coming towards the end of this consolidation in our rise feature. If we break above the $44 area, we can look up towards higher targets, for instance, up there at $4.60. And if we break down, we can look towards lower targets at $3.37. If we look for a line for sort of confirmation past post potential fake out towards breakout, I would say 370 is a fairly decent area on that respect, and towards the top side, $4.30 is a decent area for that to be, potential sort of fake out or just continuation of this, in which case you could remove that line there. You could ignore the idea of consolidating this area and talk about how we've had another higher high and higher low coming in, and ask some more questions down the line. That's going to do us for today's technical analysis. Really would appreciate if they shared this video with a friend if you've got one that you think would like it, because a friend of yours is a friend of mine. A genuine shout out to everybody who hits like and subscribe. I massively appreciate it. Salute to you all, and I'll catch you in the next episode.